Now we are inching closer and closer to that crucial day, the 31st of July. The deadline to file income tax returns is fast approaching. And here at ET Now, we've been trying to solve all your ITR, income tax return related queries. So in our brand new segment, ITR Pathshala, this time we are simplifying income tax return filing for you as we have been. In this episode in particular, my colleague Bhavya is explaining the deductions that you can actually claim under ATD. What exactly are they and how can you claim them? Here it is.
Okay, so now that I know that I can avail tax deductions of up to rupees 1.5 lakh under section ATC, and then I keep hearing that I can also avail tax deductions on the health insurance that I bought. But is that a part of this 1.5 lakh or can I avail tax benefits over and above that? Well, so looks like that besides section ATC instruments such as equity-linked savings schemes, tax saver fixed deposits and employees provident fund contribution, section ATD2 is a highly popular avenue for reducing your tax burden. Now let's take a look at how can you use it to reduce your tax liability. Well, the number one way is to buy a health insurance premium and pay for yourself, your spouse and kids. Section ATD offers tax deductions of up to rupees 25,000 on health insurance premiums paid for self, spouse and children. This is the maximum deduction you can claim under this section if you are under 60 years of age. The next point to remember is pay parents premium and claim higher deductions. If you also pay your parents premiums, you will be eligible for an additional tax SOP of rupees 25,000. And if they happen to be senior citizens, this ceiling will be rupees 50,000. So an individual who takes care of health insurance premiums for herself, her spouse, kids and elderly parents can claim deductions of up to rupees 75,000 under section ATD. The third point to remember is that higher ATD deductions are available for senior citizens. So if you are a senior citizen over the age of 60 and own health insurance policies, then the cap on deductions for you is higher at rupees 50,000. And if you're also paying premiums for your parents' policies, you will be eligible for tax deductions of up to rupees 1 lakh. The last point to remember is that you can claim deduction on preventive health care expenses. It is a healthy practice to undergo medical checkups at least once a year. Doing so will also entitle you to tax deduction under section ATD up to rupees 5,000 within the overall limit. You should remember that payments made through the cash mode will not be eligible for this deduction. Well, you don't have a health insurance? Don't worry, because you can still avail tax benefits on the medical expenses. The tax benefits under this section are not confined to health insurance premiums. If you're a senior citizen but are not covered under any health insurance policy, you can claim deductions on actual health expenses incurred during the year subject to the overall ATD limit of rupees 50,000. And if your children are paying for these expenses, they can claim these spends as deductions from their taxable income. Well, it is ideal to furnish these details to your employer while submitting investment proofs in the months of January and February, because that ensures that your employer does not deduct excess tax. But if you've missed the deadline for filing investment declaration, however, you can claim refund for excess tax deducted while filing your income tax return before 31st of July.